Hi everyone, my name is Wensheng Liang, and today I would like to introduce a topic of heated debate, that is the price change of Bitcoin. I would like to know what determines the price of Bitcoins. So in this presentation, I will cover several topics, including introduction, data preprocessing, and then I will go through modeling, and of course, counterfactual analysis. And finally, I will make a conclusion. First of all, the reason why I would like to research on Bitcoins because there are three features. First of all, Bitcoins is controlled, which means that no one can increase the total number of Bitcoins. And this feature is very different from other currencies. Secondly, Bitcoin is decentralized. This means that no one can intervene in transaction since there is no intermediary. Thirdly, Bitcoin is uncertainty, which means that the price is unpredictable. It could surge and drop in a very short time, and it's very hard to know the reason why. In this chart, we can see that in the past 180 days, the change of Bitcoin's price. We can see that before November, the price is increased stably. However, after November 20th, the price surged to nearly 19,000 and then drop in 1 week. So we can see that the Bitcoin price fluctuated a lot. So in the following research, I will make several hypotheses. So in my hypothesis, I think there are five factors which would influence the Bitcoin price. First of all is the price of the previous period of Bitcoins because Bitcoin is obviously a time series data. Secondly, I think the value of other safe haven currency could influence the price of bitcoins, such as gold, such as Chinese yen, or other foreign exchange. Thirdly, I think the price of other cryptocurrencies, such as Ether, could influence the price of bitcoins because it seems that there are little correlation. There are some kind of substitute between bitcoins and Ether. First, the macroeconomic condition could influence the Bitcoin price. If economic get better, there might be higher demand on Bitcoins. And here I will use Dow Jones Index as proxy. And fifth, I will include a very interesting variable in my model, which is popularity, because I think the more the people discuss the Bitcoin, might be higher price of it. So the share of voice could influence the price of Bitcoin. And here I will use the data from Google Trends. So every count is the search of Bitcoins, the word Bitcoins on web in each day. So here we can see six charts, which stand for several important factors in my model. For the first one is the Bitcoin and US dollar. The second one is the Ether coin. The third one is the Chinese yen and US dollar. The fourth one is the popularity, which is the count of the search of Bitcoin. The fifth one is the gold as US dollar. And the sixth one is Dow Jones Index. Before I make my model, I would like to do data preprocessing to make sure my data is correct. First of all, I will remove the temporal correlation, which is a big problem in time series data. So I will make a first difference model, which means that every price, every variables, which was dollars, becomes the percentage, which means the price change. So now every data will be the change of compared to the previous period. Secondly, I will try to avoid multicollinearity, which means that I will exclude the variables which have correlation higher than 0.8. Lastly, I will exclude all NA data because in some days their data are not provided. So I will exclude the weekends and leave me 94 data. When building model, I follow several procedures as follow. First of all, I will make a simple regression for each variable. Like, if I would like to know the correlation between Ether and Bitcoin, I will make the model M4.1. And then I will pull all significant variables into next step. I will try to compare every variable and then pull those which have higher influence and run another map to Stan. So for example, in M13.1, there are several variables which I think is important, and then I will go through several map to Stan and then make a comparison. So in the models comparison, I have to check that all R-hats in all models equal 1, which means they are convergent and they are stable. And the results are as follow. We can see that M14.1 have outstanding and M4.1 also have some weighted. And every models have its own importance, so I will include all model in my following prediction. On right hand side, we can see that there are coefficients of each models. So let's take M14.1 as example. We can see that for the second rows, the BE stands for the coefficient of Ether, which is positive. This means that Ether has positive relation with Bitcoins. And for BD stands for the coefficient of Dow Jones Index, which is negative. This means that the higher the Dow Jones Index, the lower the Bitcoin price will be. So after I make the weighted model, I will conduct a counterfactual analysis on several variables which I'm particularly interested in, and they are Dow Jones Index, Ether, and Google Trends. So on the left-hand side is Dow Jones Index. We can see that there are a slight negative correlation between this variable and Bitcoin. For the middle chart, we can see that there is a little positive correlation between Ether and Bitcoin. On the right-hand side, we can see that the Google Trends has nearly no correlation with Bitcoin's price. So in these three counterfactual analyses, we found there are no clear or there are no strong effect on Bitcoins. So that's why we need to make some change. So here I found out that the data might need to be split into data set because before November the price of Bitcoin is quite stable. However, after November 6th, the price have surged and then drop, which within limited days, which means that on right hand side, the data is more fluctuated. So I will split the data into two sides. One is most stable and the other one is more fluctuated. So I will rerun the models with the 6 data and we get the following result. The counterfactual analysis of first 60 days is more clear. We can see that especially for Ether price, the correlation is stronger. We can see that the models could make better prediction before the recent fluctuation. On the other hand, we can see that the last 34 days for Ether coins, the correlation has disappeared and even turned to negative. This means that the recent fluctuation has destroyed or impacted on the accuracy of the prediction, which is the models I made. So the model can poorly predict the last 34 days data. Now, I would like to make conclusion of my finding. First of all, I found that most safe haven currencies such as US dollar and other foreign exchange, they are pro, poorly correlated with Bitcoin. So these currencies or even gold price are not correlated with the price of Bitcoin. Secondly, the price of other crypto coin, that is Ether I use in my model, does have strong effect on Bitcoins. So since the crypto coin are kind of substitute to each other, so it is reasonable that they are correlated with each other. Thirdly, the macroeconomic condition, which I use Dow Jones Index, has slight effect on Bitcoins, and which is negative. This means that the better the macroeconomic become, the lower the price will be for the Bitcoin. And finally, because there are such fake result and such ambiguous result on my prediction, I found out that the basic Bayesian model I use cannot explain the time series data well. We need to split the data first so we can find out some interesting insight, but the result could change in time to time. So we need to find a better way, such as multi-level model to make the time series prediction. So this is my presentation. So thank you for listening. If any feedback is welcome, and you can reach me with my email.